One, you don't need a guarantor. Number two, there's no what we call a credit check. Yeah, you know when you want
kama uko CRB
that one doesn't really look at. You can now trade with that policy with a bank, and let's say you have your document here, you can give it to a bank and tell them you want a loan against that policy.
So in other words, it can be used as a collateral.
Yes.
Hi everyone, I hope this video finds you well. My name is Martin, in case you're here for the first time. Na sisi ni watu wa insurance. We do civic education as well as reviews on insurance, especially within the Kenyan market. So kama uko hapo kuna swali ya insurance, we recommend that you type those questions in the comment section below and you'll be able to do a detailed video just to help you understand insurance. Just before you buy, you need to understand to avoid frustration at the point of claiming. Now, in today's video, we want to respond to I've had a few people ask me about policy loans. Mtu alichukua policy ya miaka 15 na amefika mahali anasikia kwe kidogo mfuko imekataa.
Sure.
So they have heard about policy loan. Kama uko na policy ya life kama it's education, ukifinyika kidogo kama mambo ya medical, you can rush and take a loan. So we want to look into that. What are the conditions that will allow you to have a policy loan? The terms and conditions, the risk considerations, hizo vitu zote. You at least watu wetu wakichukua policy loan, mtu ajue what you are getting yourself into. Yes, tupeleke na
really.
Yes.
Yeah, so
first of all, maybe you can explain maybe not everybody understands what a policy loan is.
Okay.
Yes.
So basically what a policy loan means is a facility you are given as a free benefit if at all you have an endowment plan or an endowment insurance policy. So by this I mean endowment have a few things. Number one, it's a savings plan. It's more of a savings plan than an insurance policy. But as you build up your saving, it also gives you the benefit of insurance. So if let's say you are doing or you are building an education kitty with an insurance policy, with an insurance company, or a savings plan, or even a retirement plan, those are basically endowment plan because they have, number one, a maturity date, and you are guaranteed by the time you are signing, you already know how much you will get at the end of the season. So all those plans, that is the retirement plans, we have education plans, we have the savings plans. What they give you is an opportunity to borrow against those policies, but with conditions. So you may get 80 to 90% as a loan from that policy. What I mean is, if let's say you save 10,000 a month, and your policy sum assured or policy target, let me call it target, is 1 million. That policy, the more you save it or the longer you save it, the more the value it gets. And usually what you'll find is that insurance plan like that one, from either the second year or the third year, it gets what we call the cash surrender value or cash value, meaning that you can now trade with that policy with a bank. And let's say you have your document here, you can give it to a bank and tell them you want a loan against that policy.
So in other words, it can be used as a collateral.
Yes. But what you'll find is majority of insurance companies, instead of you going with that policy document to a bank, it allows you to borrow from the insurance itself.
Okay.
Yeah. So a policy loan is basically the facility you get from the insurance itself.
What qualifies one to take a policy loan?
Okay, so one of the things is that you must have saved with an insurance company for a period. Some allows you to do 2 years so that your policy gets now the cash value. Others allows you to do 3 years, others 4 years. But the most important thing is that you must have had an insurance policy with an insurance company, and there are several benefits of borrowing from an insurance company rather than a bank. So the very first thing is that you don't need a collateral. Yeah, you basically have a policy document, which is your security. So you just take that policy document to them, or to some extent, some of the insurance companies, big ones, have created a kind of an online service. You don't need to go physically to an insurance office, and it auto-calculates. So if you have a policy A, policy B, policy C, and maybe you supposing you are in the 3rd or 4th year, you can just click to a certain drop down, then you can see how much you qualify automatically, and it's very, very easy. So that is one. Number one, you don't need a guarantor. Number two, there's no what we call a credit check. Yeah, you know when you want.
Kama uko CRB.
That one doesn't really look at that.
Yes,
that is the biggest benefit.
Yes,
because
in other words,
yes,
you are being you are borrowing your money.
Basically, what you are not you're not really borrowing your money, your own money, because we have pooled the resources as a group. So an insurance company have that one basket, which it puts its reserve. So what you'll find is, because if you are borrowing your own money, it could be a different thing. But what we are using is your own money to safeguard or to get to put it as a security. So we go into that basket and we offer you something for kind of an emergency. So that is another benefit. There's no credit scoring. Number three is a very quick access. A policy loan, usually what you get is that within 24 hours to 48 hours, you have the money at your disposal with no paperwork having been written down. So that's another benefit you kind of get. And another thing is very flexible repayment terms. You don't need much. They just tell you you can repay this money within either 6 months, 1 year, 2 years, 3 years. So the terms are very, very flexible. At the same time, the interest is quite low. You will find that as the bank's rate keeps on fluctuating. So one time the central bank is charging this, so they increase. Another time they drop. But for an insurance loan, it's constant, and it doesn't really do what we call a monthly compounding. Yeah, it's what they offer. Majority of them is around 14%, 14.5 maximum.
So you can almost predict how much you will pay.
Absolutely, you will know. By the way, when you are applying that loan, you will see how much you will repay in total. So there's no change in numbers. So again, you don't have to worry about the compounding. It doesn't really have that high compounding rate. By compounding, I mean that you know how money market behaves, that even mazao yenyewe inazaa.
Yes.
So in this case, there's no that effect. Yeah, so basically those are the 3 main or 4 main things that
qualifies one to have a policy loan.
Good. And why you would consider having it with an insurance rather than with the bank. But on the flip side, there are also other disadvantages
or risks.
So what you'll find is that because what we are saying, when you take up a loan, you know, for an insurance, you're not. It's not like you must pay.
Yes,
you can choose not to pay. That is another biggest benefit. Yes. By the way, you can take up a policy loan and choose not to pay. If you don't pay, what are what are the implications? Number
Yes.
one, you know, an insurance already have a reserve, or some of these plans also have some kind of death benefits. So what they will do is at the end of the period, you will find them deduct your loan from your death benefits. So if you were to get maybe 1 million in the event of death, and probably you have like 300,000 as loan, they just deduct and give the difference to your appointed next of kin.
So in other words, you are going to deplete the value that comes with insurance.
Absolutely. Yes,
Okay.
yes. So that is one of the risks. Number two is if the policy lapses. Assuming you have been paying your policy, and then at a certain point you borrow against the same policy. So remember, now you have two contributions. You have
the loan,
and you have now the normal contribution. If at some point your policy stops, and the loan plus the arrears of the policy are equal to the cash value, the policy, that's what we call auto-surrendering. Meaning,
so what do you mean by policy stop is when you are unable to pay the monthly premiums?
Absolutely.
So if at some point the arrears, they match with the loan plus the interest.
What I mean is this: if your loan and maybe the match you ought to have paid, see, there's that monthly contribution.
Yes.
If let's say you are paying 10,000 and you also took up a loan that you're supposed to pay 5,000.
So in total is 15,000.
In total is 15,000. So assuming your cash value is 300,000, and possibly you stopped, and now the total arrears have come to around 300,000. The policy automatically surrenders, so that you owe nothing to the insurance,
and you don't have any savings.
So that is another risk. So you make sure that if you are borrowing, you must pay. You also,
okay, you can choose not to, but you are going to lose quite a lot.
Absolutely.
The whole essence of starting that policy is going to do.
Maybe after 3 or 4 years, which doesn't really make sense. Number 3 is what we call the compound interest. As much as we don't have that high interest, some of the insurance company applies quite a high compounding interest rate, so that you find that your policies, the arrears are building up very fast to match up with the way you are saving.
Okay.
So that is why it's quite important. Even as you take up this policy loan, be careful so that you don't lose your benefit. And finally, another risk is automatically, if you don't die, of course you will have to live up to that term.
Yes.
If supposing you had a policy of 15 years, and now you decided not to pay. Remember what we said, it's not a must that you pay. If you decide not to pay, at the end of 15 years, what they will do is that your policy loan will reduce your maturity benefit.
Okay, so even if you're able to pay,
yes,
it's still going to affect your
if you
final pay.
If you at some point you are unable to pay, and then the maturity comes, they will have to deduct their loan, and then you are left with the balance. So that is another risk. So what really is allows you to take up the policy loan, there are conditions when you are allowed to take up the policy loan. Number 1, if the policy is over 3 years, that one you are allowed to take up a policy loan. Number 2, if your policy does not have any arrears, the policy must be up to date, so that you are allowed to take up a loan. And finally, if an insurance policy is very new, that one you may not qualify.
Or because you want to like allow it to gain the value.
Good, you
cash
must
value.
Cash value. The first thing is we want to encourage you
to save fast,
to build up.
Or build up
the savings so that you can qualify. So basically it's a simple process, but it's very, very important. Sometimes you are caught in a situation when you need money urgently. Maybe you have an emergency or you have something like a medical bill. You may not really want to expose your problem to the public, or because if you want to buy or to take up a loan from a circle, you need what? A guarantor. So you'll have to notify your friends.
So if you have an insurance, you already have it.
Good. If you have an insurance policy, you don't need to really struggle. Yeah.
Wow. So I hope you have been able to learn something. And when you want to like take up a loan, it's good that you look both sides, the advantages and disadvantages, and try to like strike the balance, because at the end of the day you need that policy, because the goal you don't want like to interfere with the goal. Kama ilikuwa ya kusaidia mtoto, make sure that you fulfill that.
Absolutely.
Because you don't want to like uchukue loan then mtoto akifika tena, the reason why you took up the policy is not going to serve the purpose.
Sure.
So thank you very much for watching this video to the end, and I hope we gave you value for your time. Keep those questions coming. We are looking forward to answering you with a video such as this one, and we hope that you will continue to learn.
Absolutely.
So keep subscribing, liking, sharing, commenting, and everything possible. And thank you very much for your support. And until we see you in the next one, God bless you and
bye bye.
Bye bye.